Good morning, viewers. It is Monday morning, January 13, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's Business News. We provide you the latest and updated 5 minute summarized US market wrap. But before we roll on, please do subscribe, share, and like this video. Thank you. Now, let's roll. In another blow to the prospect for further rate cuts and the Fed's confidence in easing inflation, the US job market again defied an anticipated slowdown, with firms adding more than 250,000 jobs and leaving Federal Reserve policymakers to puzzle over the need for more interest rate cuts in a strong economy. The good news is starting to once again sound like bad news. New non farm payrolls data shows the economy added 256,000 jobs in December, blowing past consensus expectations of 155,000 to 160,000 by economists. The unemployment rate edged lower to 4.1%, where it had been expected to hold steady at 4.2%. The numbers are among the most scrutinized economic data in markets, in large part because they help shape expectations for monetary policy. The report painted a strong picture of the economy, but let down traders who are eagerly awaiting lower borrowing costs. The S&P 500 wiped out its 2025 gains as investors assessed a blockbuster jobs report that makes future interest rate cuts seem less likely. The gauge saw its worst drop since December 18, 2024. The S&P 500 was down 91 points or 1.54% to 5,827. The Nasdaq Composite dropped 1.63% or 317 points to 19,161. And the Dow Jones Industrial Average fell 697 points or 1.63% to 41,938. All three indexes notched the second straight week of losses. Shares in small cap companies, which can be more vulnerable to fluctuations in interest rates, came under the most pressure during the session, pushing this Russell 2000 down 2.22%. 10 out of the 11 categories of the stocks in the benchmark 500 S&P 500 closed in the red, led by financials, real estate, technology, and consumer staples. All three sectors are sensitive to interest rates. Meanwhile, energy stocks ended higher. The US dollar index, which measures the greenback against a basket of currencies, including the yen and the euro, rose 0.39% to 109.70. It reached as high as 109.97, its highest level since November 2022. Oil prices rallied nearly 3% to their highest in 3 months as traders braced for icy weather and supply disruptions from the broad US sanction package targeting Russian oil and gas revenue. Brent crude futures were up 3.69% to $79.76 a barrel after reaching their highest since October. US West Texas Intermediate crude futures settled up 3.58% to $76.57, also a 3 month high. Gold prices rose and were on track for the fourth straight day of gains. Spot gold rose 0.73% to $2,689 an ounce. US gold futures settled 0.9% higher at $2,715 an ounce. Meanwhile, investors were also considering the financial fallout from the devastating Los Angeles fires, with some insurance and utility stocks under pressure. Insurance stocks dropped. The Los Angeles wildfires could be the costliest blaze in the US history, initial estimates suggest. Allstate lost 5.6%. Other insurers such as Progressive and Travelers also dropped. Benchmark Treasury yields jumped after the jobs data. The 10-year yield closed at 4.772%, highest level since November 2023. The 30-year equivalent touched 5% before closing at 4.962%. The Fed is nearly universally expected to leave short-term borrowing costs unchanged at its January 29 policy meeting. That's it for today, folks. I will see you again tomorrow morning. Happy investing. Stay inspired and remember, it is all about money.